Good morning, good afternoon, good evening, everyone, depending on the side of the world you're at. We're about to start CBDC Broadcast Session 22. The next frontier of payments will be focused on offline payments. We're going to allow a couple of minutes for people to join. Thank you for being here. In the meantime, I'm going to go through some of the usual housekeeping. As you know, the CBDC broadcast, which is an FNA broadcast, has an extension of 1 hour. First 5 minutes is about housekeeping. Next minutes are devoted to the discussion with our co-speakers today. Then last 10 or to 15 minutes are going to be devoted to the question and answers, in which we're going to try to answer all the questions that have been submitted through the Q&A only, not the chat, only the Q&A widget in the FNA platform. So if you have any questions, please send them through Q&A, and hopefully if we have enough time, we're going to deal with those questions with our co-speakers. So let's give one more minute. I can go through the FNA presentation in the meantime. So about FNA, for you who do not, or it's your first time attending our broadcast, FNA is a leader in advanced network analytics and simulation. FNA software is used to uncover hidden connections and anomalies in large complex datasets, which are also used to predict the impact of stress events and to optimally configure financial systems and infrastructures. That's our task. As you can see in the icons to the right of the slide, FNA is trusted by the world's largest central banks, government authorities, commercial banks, and financial market infrastructures. So, without further ado, let's start. Today we have two prime speakers. We have Joachim Samuelsson and Sunil Karkera. Joachim is the CEO of Crunchfish, a very well-known firm in the CBDC realm. Crunchfish is a deep tech company from Malmö, I hope I pronounced it well, Sweden, which is focused on offline payments and gesture recognition. Joachim, thank you very much for joining us today.
Thank you so much for having me. It's a pleasure.
Thank you. Sunil is the Senior Product Manager with IDFC First Bank, one of the leading banks in India, which is also a digital first bank. Sunil, thank you for joining us today.
Thank you for having me, Carlos.
Good. Before we start, I usually give a couple of seconds to our co-speakers to present themselves, to tell us a little bit more about their current role in the digital currencies realm, and also to give the disclaimers that they deem appropriate. So let's start, Joachim.
All right. Very happy to be here. Joachim Samuelsson from Crunchfish in Malmö. You were very close there, Carlos. South of Sweden. And we've been specializing in offline payments for 4 years. And I don't know if this is the time before Sunil comes in, Carlos, because I like to share a few slides just to set the tone a little bit. Would you like to do it now, or should we wait for Sunil as well to present himself?
Perhaps we can do it after Sunil then.
I think so. Yeah. Sunil, over to you.
Sure. Yeah. Hey, hello, everybody. This is Sunil Karkera. So I work as a Senior Product Manager with IDFC First Bank in India. It's one of the leading banks in the country, which positions itself to be a digital first bank. And I majorly take care of certain innovation-based charters for payments, CBDC being one of them, which is in the pilot phase for India. UPI as our global champion for payments is also something that I look after. And of course, there are other payment railroads that we support within the country for near real-time and real-time positioning. So these are some of the areas that I focus towards with my association with IDFC First Bank.
Thank
over
you,
to you,
Sunil.
okay. Maybe we can go through the
Thanks,
content.
I'll share my screen, I think. Can you see this?
Yes, we can.
Excellent. we're very happy today. We have concluded our white paper series. We've been working for the whole year together with Lepis Advisors, payment experts out of Berlin, in a series called Enabling Offline Payments in an Online World. Payments today is mainly online, and we really see offline as a great complement in order to get resilience into online payments. And this last paper that was just released today is talking about how can we ensure trust, because now when the back end may not be involved, you need to ensure trust in those payments, and we particularly want to see practical solutions. So how do you get those solutions scalable? Because I think there is a lot of theory around, but I think quite often forget that it needs to be work in practice as well. So the word scalable, how do you really scale it for large scale implementations is extremely important, and that's what we've been working with. Let's see if I can change the slide here. So this, if I start with the online world, I would say the dominating two form factors in the online world are smartphones and smart cards. There are feature phones as well, but it's sort of more niche. In India, I think there is about 30% of the population has feature phones. In Africa, there are feature phones there, and the operators are involved in the payments ecosystem a lot, and then it works really. But for most of the rest of the world, I think it is the smartphones and the smart cards that dominates. And the smartphones, as they are today, cannot really work for offline payments unless you add trust into them. However, the smart cards, they are already in an isolated, secure environment as a standalone TRE. That stands for a tamper-resistant element, which really could cater for doing offline payments as well. But really, as we are moving mobile more and more in the world, I think one of the key questions here is how can we get smartphones? How can we get smartphones to also have this trust in their environment? And there are a couple of ways to do that. The rich execution environment to the top left is what really doesn't work, because it doesn't have a secure runtime for the cryptographic keys or the offline assets. And the offline assets, I mean the offline balance, the transactions, all the rules that you may set up for what do you possible to do for offline payments, and also storage. So the rich execution environments that is involved today in online payments, it simply doesn't suffice. So you need to move from there. You can move down to involve hardware elements, and the hardware element could come in two ways. You can either have it provided by the device, by the mobile itself, and this tends to be that you're relying on a standard thing on Android called the Android key store, or maybe going up even to what's called a strong box on Android. You can have it on iOS as well, and then it would be the secure enclave with its keychain. The problem with these environments is that they only handle the cryptographic keys. The offline assets is not really following. And then you are not really solving for the problem, because it's easy. You are just as exposed as you are in the rich world, really, for manipulation on any of the offline assets. There are also possibilities to write in the ARM trust zone in a TEE, but practically, you really can't roll that out in the market because of device fragmentation, because there are many, many TEs. You have to write different versions, and you need to make agreements with the phone manufacturers in order to get it in there. So for all practice purposes, I don't think the device integrated solution really works. It's unsecure if you don't have all the assets. Otherwise, it doesn't work. Moving to a standalone, this is on a SIM card or an embedded secure elements or eSIM. That works, as we've said, but you are suffering from similar problems that you have to make agreements with, say, mobile operators or even device manufacturers in order to get it out. And what we have been pioneering in Crunchfish is what you see at the top left there. It's a software-based solution. It's still a trusted a tamper-resistant element there, but it's app integrated instead. And that is what we believe is really the only viable solution that can work, that has both security as well as scalability. So really for smartphones, we believe that this is, I'm sticking my neck out a bit, but I think that is the solution that will work as a virtual secure element, protecting the assets that you have to have for offline payments. I'm going to stop there, Carlos, so I'm not stealing everything, but I wanted to set that tone. Thanks.
No, that was great to understand what you're doing and where you are going. And just to clarify, when you said that your solution was on top left, it was the one on top right. I mean,
the top right. Yeah, sorry. Yeah, the top right. Yeah.
Otherwise, it wouldn't be secure. It wouldn't be anything.
Yeah, the app integrated. Otherwise, we are just in the very unsecure software world. Yeah, you're right.
Exactly. So, after this tone stating presentation, well, very brief presentation that we thank you for, Joachim, we all have seen what we're going to talk about. Normally, I would give like a 1 minute, 30-second introduction to the subject. Today, I didn't do it because I knew that Joachim was going to present something, but we all know right now what we're going to talk about: offline payments and how everyone is, or perhaps not everyone, but a lot of people is expecting that new digital payment instruments are capable of doing offline payments. And some of the things that we are going to discuss have to do with with safety, with privacy, and with how offline payments could change the way that we pay at some point of time. In, for instance, retail CBDCs, which is one of the main discussions. And as we all know, this is the main topic of this broadcast, CBDCs. So we already had a very nice introduction from you both. Thank you for that. But we're going to start with Sunil now. Sunil, in cash-intensive economies, and I can think about that very well because I'm from Bogota, Colombia. That's where it's a little bit dark. It's 7:12 a.m., so it's a little bit dark here. In Latin America and in your region, in India, for instance, how do you position digital offline payments? People love cash. Cash is intensively used. What are the use cases that could guarantee scalability for an offline, for a digital payment instrument that is capable of offline payments?
Absolutely. Happy to answer that. So, Carlos, like you said, a region like India and even Latin America, right? It's a cash-intensive region where where cash is the king, right? But slowly, that thought process or that stance is being challenged by the innovation that is being brought in from a digital transaction point of view, right? Digital cash or something like UPI that has revolutionized the way people transact. Even for a small ticket transaction alike and the large ticket transaction alike, right? It works in a jiffy, right? So that revolution is started, but what is the roadblock? So in a month, just to give you some statistics, right? In the month of October 2023, India clocked about 11 billion transactions, unique transactions through UPI. That is just one railroad. So what would it take for this 11 billion to hit a 50 billion a month roadmap, right? The answer is offline payments. Essentially, not all of the population is exposed towards high-speed internet, while the smartphone penetration is quite higher from where we compare ourselves 5 years back then, right? The percentage is multifolds. So what one base assumption that we have to live with is the smartphone penetration is going to go higher and higher and higher, right? And these are the we have also seen a high intensity trend where the smartphone adapters are also the early adapters for digital transactions. It's a tendency to move away from cash, right? It's much higher somebody who owns a smartphone and who is already experimented with online digital transaction. Now, what will offline transaction enablement bring in their life is not having to worry about having internet nor network on their phone. Because traditionally, why do people prefer cash is because it's money that they already have and in their pocket, right? They don't have to rely on anything else. It's there in their pocket. The reason why a large population of such geographies are shying away from digital transactions is they're not sure whether when they want to make a payment, will they have network or they won't. And traditionally, all digital payment ecosystems have been developed in a way that it's assumed that there will be internet at the time of making a payment. Well, if you really decouple it and fragment it and think about it, these two are unrelated aspects, and it should not have to be related for a customer to make a digital payment. It should be allowed without an internet as well, right? Without network, without internet. Imagine you being able to make a payment securely and without having to worry that this money, which is digitally held and digitally, the transportation of this money can be digitally transmitted between the payer and the receiver securely without internet and network. I think there is no reason for this sort of uh, facility to not cascade within the entire region. So that's my opinion around how offline payments will add value in a cash intensive geography.
Thank you, Sunil. And you mentioned a couple of times an interesting word, which is internet. And this brings us to a very simple, but not that simple discussion. And last night when I was preparing the broadcast, I remember that Christmas last year, we had a discussion in Twitter, now X, with some experts in payments about what offline payments are. Because some people were referring to offline payments like this. Someone said, no, that's not offline. Offline is this. No, offline is this. What do you think? And this question is for you both. How would you define offline? Is the absence of internet? What is it?
If I could start there, Sunil, I think the way the BIS have defined it is that you are doing a transaction without the online ledger. So you're essentially doing a proximity payment without the online ledger. I think that is one way to say it, but I like to look at it a little bit broader, because I think a lot of people are now using real-time payment rails. And if you don't have internet, as you said, Carlos, you could connect using the traditional telecom networks. You have network connectivity, but not internet. That is, we call that the digital cash telecom solution. You are offline then. You don't have internet, but a solution then could enable you to pay. This is very similar to what they're doing in Africa, using the telecom network with the operators to do transactions. But we've seen in India as well, the first version of UPI Lite, that just made the remitting bank allowed that one to be offline. Because of the enormous load of payments in India, they wanted to load balance the system. So if you could pre-reserve some money, which was actually held online, but not then sitting with the remitting bank could be offline at the moment of transaction. So that's also some sort of type of offline transaction. So I think it is broader than what BIS defined, and it's not just outside if you don't have internet, but it's I see that you are enabling payments where you are allowing any of the entities to be offline. That could be the user, could be a remitting bank, or then that you don't have network connectivity. That is more offline for me.
Thank you, Joachim. Sunil?
Yeah, I think some of the Joachim touched upon, right? He's absolutely right. Offline payment is a term which may differ at a different situation. The types of parties involved for accepting or making that payment, right? From a consumer point of view, I would believe a true sense of offline payments would be something that the user does not have to worry about anything other than his ability to have that money in the first place, right? Neither internet nor network, maybe in future, who knows, not even a smartphone device, right? But that does not mean we start with the end state solution, right? It's not a must have that we need to have a situation where internet is not there, network is not there, smartphone is not there. We can always start with baby steps. Like Joachim mentioned, UPI Lite in India does not mean anything like no internet, no network, right? It still relies on API based, internet based communication between front end and back end. It's just a load that is shared from a single point of remittance to there is a bit of a load that is being moved to a central party there, which has higher availability, right? Now the next version of this, of course, means that ability of a user or a consumer not being able to connect to this entity as well over internet. It could be again the most logical step in my mind would be network-based communication. Again, keeping in mind the trust element that should be brought in at the client side instead of a traditional way of working where the trust is residing at the network side, right? I think in my mind this is a very subjective positioning where someone may call offline payments very differently at a very different circumstance.
That's great. I think we agree that we don't agree. I mean, there are like several. I mean, each one of us has like different elements to the definition, so there's no clear or clear-cut definition. I think it's absent, and that's okay. I think it will, as Sunil says, and that's something very interesting, Sunil, that it will evolve through time, what we consider an offline payment, and it also depends on the eyes of the bystander at the end, because the user. And I like your idea of if the user is not worried about anything about the payment, for sure it was an offline payment. I mean, it could have been like an offline payment at the end. That's really interesting. And the good thing about this is that this verifies that this discussion in Twitter 1 year ago was not in vain. I mean, it was really interesting to see that none of us was right, but everyone was right at the end. So that's fine.
Absolutely.
So let's go to the next one. Joachim, what are some, from your view, what are some of the key factors in making an offline payment platform scalable for large scale usage?
Yeah, as I had in my initial presentation here, I really think the key, you need to bring trust into a smartphone, because I think the smartphone is what really needs to work offline, and you have to have trust in that environment, and to do that wide scale in the market, and not just for, say, one mobile phone or for one operator. It is to be able to distribute this together with the payment application. The payment application already works online, and you want that to also work now offline. So you need to have what we believe is an app integrated trust element. I think there is no other way to get wide scale use really than that. Another factor is what Sunil talked about, is that I think a great first step would be to allow smartphone users that if they have a glitch in their internet connectivity, to still to do scan and pay. They can scan a QR code and they connect using the telecom network. To enable that is a great first step. It's not too risky, because the security is still, you're still touching the online ledger with that solution. I think it's a great mass scale implementation. The third one I would say is to look at the smartphone as the hub for offline payments. We're talking about CBDCs here. We can't conceive CBDCs where people are only using, say, cards and having consecutive payments between you and me, Carlos. I have a card, or you have a card. The only way to pay between us is to sort of put some device in between, and it would be a very clunky, very clumsy solution. But a smartphone, with a smartphone as the hub here, you can transact even in full offline mode. with between a smartphone and a card, or a card and a smartphone, or a card and or a smartphone and a feature phone. So really having the smartphone with its trust element there, I think is a great enabler for large scale implementation. So I'm looking at the software-based app integrated trust. I'm looking at make use of the telecom network, which doesn't necessarily then have to use internet, and use the smartphone as the hub for smartphone atomic transaction, always with the smartphone sort of there. I really think that's going to enable great offline use in any sort of country, really. The feature phone and the cards are peripheral to the smartphone, really, how they interact.
That's great. I have a question after hearing your answer. Based on smartphones as hubs for offline payments, is there a way, or it's supposed to be a way, there's supposed to be a way for us to be able to pay through our phones offline, even if you're in Sweden and I'm in Colombia? I mean, can you do distant payments, remote payments, even if there's no internet?
Well, yeah, that's the telecom solution. What the telecom solution enables, if I go to, say, I've been to India quite a few times, my operator charged me $18 a day to get data. So I turn off data, but I can connect using the IDFC First Bank app here. I can connect using telecom network. I can send a simple SMS to their backend in order to start initiating that payment. So the telecom solution gives you scan to pay without internet, so you can pay to a static QR code, but it also gives you pay to contact. So I can pay you in Bogota, even if I don't have internet. That's the beauty of the telecom solution. So it's just an implementation only on the issuing side, and it's applicable for everybody. So it's a great, I think, as Sunil was talking about, let's take this offline in pieces. The digital cash telecom solution, and this is what we just were awarded by the Reserve Bank of India at their global hackathon for this solution, because I think they understand the potential that will bring to a market. Because now you can all of a sudden pay anywhere in India, anywhere you have. If you have a smartphone and you do scan and pay, you can pay. You don't have to rely on the internet, and this could work in the background. Even in the major cities where you typically have internet, all of a sudden you have congestion. What do? Well, the app itself can reroute it. Instead of connecting it with internet, it will connect over an SMS. I'm sure Sunil can talk more about this solution, but that's the scan and pay without internet, and as well pay to contacts without internet. Great thing.
Thank you, Joachim. Very, very enlightening. So next question for you both. Can you share with us some insights into the specific techniques that you're using to encrypting data and verifying transactions offline? I think this is a very interesting type of, or this is a very interesting topic, because everyone obviously is interested in security, the safety of payments, even online or offline. What can you tell us about how is the architecture to provide security for offline payments?
Absolutely.
Who wants to start?
Okay. I'll give it a shot here. So, Carlos, to answer you, this is a typical design choice, right? There are many design choices that are available in the market, where encryption methodologies are there, where you can completely rely on, which are prescribed, suggested by the regulators as well, right? From a security standpoint. But typically, what we have observed, me and Joachim have extensively worked on this area. What we realized is, instead of encryption, right? Why not make use of digital signature? They're pretty light in terms of verifying at the back end. If telecom solution has to be used, right? The message is the SMS is just digitally signed with a trusted element at the client side, and it's verified at the back end and then processed as well, right? It's a very, very light and quickly resolved in terms of packaging and unpackaging the whole. Then of course you can add up a few serialization and deserialization methodology in terms of having uniqueness so that it's not interrupted by any third party, right? It's a pretty light way of having an offline interaction between client and server eventually. And of course, Telcom is there to support you here. Maybe Joachim can add some more insights here, but this is one of the design choices we feel is highly scalable, secure, and fast.
Yeah, I think the digital signatures that it's actually what, if you look at, we have offline payments today. Any sort of smart card, the way it interacts with a card terminal, it's essentially sort of interacting with the digital signature to the card terminal. It's called offline data authentication. So it's been used for a long time. Visa put out the good paper in I think it was 2020 when they talked about offline payment solution, how that could work really, and they also talked about using signatures there. So I think a PKI based solution where you have a trusted environment on the payer side that can sign out a transaction, I think it's the way to go. And the whole card rails are using it, and I think it is best practice to do that. And as Sunil said, that signed message could be sent in proximity to someone who could verify it in proximity, but it could also be sent over telecom to the backend, as Sunil was talking about. But the actual offline message, in order to be able to trust that without, say, any other party verifying it, I think it is a good practice to have you establish trust in one step beforehand by having certificate authorities out there, and then you could sign the message, and it could be verified by any node in the network, really, what you have signed out as the payer. So I'm a strong believer in that. You have a trusted environment on the payer side, and then you digitally sign out transactions, and we've seen that, and that's what's being used on the card rails, which are the offline things today, really.
Good, thank you, Joachim and Sunil. Now, normally the CBDC broadcast, we like to understand a little bit more about real use cases. So next question is about use case, and that's why Sunil and Joachim are here, in fact, which is, can you both explain a little bit more about how the technology works to allow offline transactions with the digital cash SDK that IDFC First Bank has access to? I think we can start with Sunil now.
Absolutely, Carlos. So essentially, you're right. We already have a prototype built in, which is in a lower environment than population scale, right? Where we are using the Crunchfish digital cash SDK, which is embedded within the IDFC First Bank mobile application, right? The way it works is the SDK brings in the trust element to the interaction between the payer and the receiver. Be it like Joachim mentioned, be it proximity or be it long distance transaction. From a use case point of view, just to elaborate this area, right? When you're typically flying in a flight, right? What is the general notion of making a transaction? It's a proximity based transaction, right? When you're trying to purchase something online or in flight, right? You certainly don't have internet, neither do you have network. It's a proximity based interaction, right? But again, now this situation is not perpetual when you're on the ground. Your situation is different. You may have network, you may not have internet, right? At some areas you may have both. So your application, which you rely on all three instances, right, needs to be smart enough to understand your situation and act accordingly. So your initiation mode of your transaction, whether through internet, whether through telecom, whether through proximity, needs to be preemptively enabled. Like Joachim said, the typical PKI factory, where the certificate authority embeds a user level certificate within the trusted element in your device. Then you can very well initiate a transaction in any of these scenarios, right? Without any dependency on the server side element. So this is where this prototype that we have built, right? It enables a user at all three instances. The user need not worry about what situation he is in, right? This is what I feel would be the true power or true enablement offline payments is going to bring into the users' palms.
Thank you, Sunil. Joachim.
Yeah, I think Sunil touched on that it could be, in proximity without any connectivity whatsoever. But it could also be connecting to the backend. And this is what I think the first product we're putting out, which Sunil can answer that, but it's going into production, is for the e-rupee, for the digital rupee. I don't know if Sunil have received the RBI go ahead yet, but I think it will come anytime soon. I think one of the things that I believe is important, I'm going to stress that again, is that the application that IDFC First Bank have that is excellent for online payments, for UPI, and also for e-rupee transactions. What we do is that we add this, what Sunil refers to as the trust element, the tamper-resistant element, into the app itself. And the beauty with that is that now they can just upgrade the app, and it can, just over app stores, it can go to any of their users. They don't have to worry about any other infrastructure that, we have not made agreement with, say, Apple, so we can't put it on the iOS phones. But this is actually just going out through the same channel as the payment app goes through. And I think that's a great enabler in order to, because if you're a payment provider, you don't want these dependencies that my application now will only work in certain scenarios. I think the fact that we can upgrade an existing payment app and get it out everywhere, I think that's a key way that the technology works, because you don't want to be limited if you are a payment provider by agreements with phone manufacturers or mobile operators. You want to be dependent on that. I don't know, Sunil, if you want to comment on, because you've seen some of these solutions in India, haven't you?
Absolutely. So you can, just to add, right, like one of the underwhelming areas that we generally skip is the interoperability aspect. That certainly plays a major role in terms of scaling the whole offline solution in multi-folds, right? Any offline payment railroad or enablement should not be restricted to a particular payment railroad that exists. So today, like we have experienced, right? CBDC in India is interoperable with UPI. UPI is a highly adopted platform anyways. So if you bring in offline payment solution in CBDC, it should not be restricted with an essence that it will not support interoperability. The only way this could scale multifold is interoperability and trust go hand in hand. So that's one of the key areas I just wanted to bring some focus.
Great, Joachim and Sunil. I'm going to skip one question because we're running a little bit out of time, but I would like to hear some discussion about what do you think about these offline capabilities of digital payment instruments to enhance financial inclusion. I think it's a very obvious question that, or a very obvious answer, that offline payments should enhance financial inclusion. But what do you see in this realm? Sunil?
Absolutely. See, in a country like India, right, we have a lot of government schemes that happen where the government wants to give the proceeds of the fund directly to the beneficiary, right? Now, to identify the beneficiary, whether to check the beneficiary has internet, whether the beneficiary is equipped to observe the funds that is disseminated to the user directly, is a big challenge in a big country where internet is again a problem in the country, right? Which is slowly getting resolved, but like we discussed, internet and ability to receive or send payment should not be interdependent to each other, right? So these government schemes, the ability to disseminate it to the end user in whether the user is offline or online is going to be very powerful in coming future, and that is where financial inclusion eventually this is one of the areas where a country like India looks at financial inclusion, where the end beneficiary receives the money, and then again the ability to reuse that money while being offline, and so on and so forth is what is going to add a lot of value in people's life.
Great, Sunil. Thank you. Joachim.
Yeah, I think talking about, I've been talking a lot about smartphones, and I do think smartphones do add financial inclusion by being able to work offline. And as I talked about the use case of the telecom solution, I talked about using it as a hub for consecutive offline payments. But we have to also recognize that not everybody has smartphones. So you need cards as well for younger generation, maybe elderly people who are not that skilled to use smartphones. And there is also in some countries for sure feature phone usage as well, which is relatively large. So in order to really enable everybody, I think it needs to look at all form factors. So smartphone use is important for offline, but we can't neglect other form factors as well, like cards, wearables, feature phones also, which is very important for financial inclusion for the entire population.
In fact, just to add, Joachim, QR codes, right? It's a form factor to receive payments, and it's completely offline, to be honest. A general store out there, he does not. They don't need internet to receive payments anymore. It's quite affordable as well to have just set up a QR code instead of a POS machine, right? It's slowly replacing the POS machine trend as well in our geography.
Great, Sunil and Joachim. I have the last question, and I think, yeah, it would be great to have the last question right now because we have a lot of questions that have been written down the Q&A widget, and you can see them if you want to. I mean, the co-speakers, but I'm going to select those which I think are most valuable for our discussion. But before we go to the Q&As, I have my final question, which is, I always like to end my questions with looking to the future type of question. So looking ahead, do you see digital offline payment instruments replacing cash? Is this perhaps the final push or the final kick towards a cash-free economy? And before you answer, I would also love to know, what do you think of cash? Should it be still around us for a while or a long time? What do you think? So 2 questions. What do you think about cash? And is this the final push against cash? Joachim.
I live in Sweden, and we are probably, maybe with Norway competing with us, the least cash using country in the world. If you ask a young person in Sweden, when did you last use cash? They may say last year. And that's even when we are in November. So very few people are using cash anymore in Sweden. And what has made that happen possible, or why is that? Well, it's not because we have offline payments. We have some people who, a lot of the working generation, a lot of people have cards, but not everybody. But we've had digital, like real-time payments. We have something called Swish in Sweden, which very many people using. So it is the online payment, which is so efficient. So, and you sort of can trust it almost all the time. So online have driven cash out of our society, I would say. But that has also made Sweden and very vulnerable. We're not resilient anymore. We have a huge problem because people don't carry cash anymore. And if there is a glitch, and it could be the worst glitch is in the back end. If one bank is down or our electronic identification service is down, that really kills the whole country for payments. So offline payments, for resilience reasons, is absolutely, and I want to stress that offline is not just at airlines where you don't have online. Offline is what makes online payments robust. That's why you need offline payments. You can't build systems which are only working when everything is working. You need to have the resilience there. So that's why I feel about it. But really, what will push cash out is to have excellent internet, excellent digital payment service which are online. Because then people will actually start using them so much so that they stop using cash. And then offline is just in a way there to make sure everything is 100% available to make that resilience part. So I really think that it is online that is killing cash. It is not offline payments in a way, but it's offline becomes very important when online is very strong as a means of payment, because without offline, it won't work. Then you have India as well, and other countries where you don't have internet all the time. Then offline is important also. And I am one of those that I probably would have to go back to maybe in the spring this year. That's when I last used cash. So I'm not against using cash, but I simply don't use it anymore.
Great, thank you, Joachim. Now we go to the other side of the spectrum of payment instruments usage. We go to India, heavily reliant on cash, as far as I know. So, Sunil, what do you think?
Absolutely, absolutely. So see, in a country like India, right, the demographic spectrum is huge. It's not just one segment. Now, someone like me who is in their who is a part of an early adopter from a digital payment point of view, I completely echo what Joachim just mentioned. But we do have a large population in the country who have never experienced digital payments. Neither there is trust nor there is ability to adopt to it, right? They still continue to use cash. So we don't see our ability to improve digital transactions, getting offline transactions, changing habits which are inculcated over maybe 50 or 60 years of their age, right? It's not gonna change their behavior with these coming in, right? It's still too soon to say that cash will be kicked out completely. Maybe in the next few decades, we will have some sort of a trend where cash is, of course, is incentivized today as well, right? But a large population still continues to use it because psychologically they do not have a choice, right? And of course, maybe a few decades down the line, this trend is going to change for sure. And these initiatives that we are working on towards is only going to strengthen the mindset that this is the future rather than going back to cash.
That's very interesting. Thank you both for your answers. Joachim already told us that the last time he used cash was in spring. How about you, Samuel?
Oh, I used cash about maybe 2 years back. I've not been to an ATM.
To what?
Which is a cash dispenser for more than 3 years now.
You said 3 years
I've not
now.
been. Yes.
Wow, that's impressive.
So
last
UPI,
time I used cash was
UPI.
like yesterday.
Oh, that's.
I always tend to have cash just because of redundancy things. I mean, it's a matter of that, because in Colombia digital payments are not everywhere. It's just a redundancy thing. And even I am going to tell something very quickly. I have a colleague when I work at the central bank, and he was robbed on the street. Afterwards, he made like some calculations of which was the optimal amount of cash that you should have on your pocket, so the robber would not be would be happy to take your cash and not take you to an ATM to steal your cash from there. You see, so cash has many faces and many uses at the end. So let's go to the Q&As. And there was one which was very interesting because of what we were discussing. Give me a sec. What about an offline solution with no internet and no mobile connectivity for both payer and payee? And I guess this is about what happens if there is no internet, no telecom, no nothing?
Yeah, well, I think this is our core solution, that it is in proximity, and I think for CBDC it's that's how a lot of people, as I said, the BIS way of looking at it is that you are not touching the online ledger at all, so you have you certainly can connect and pay in proximity between a payer and a payee. I think that is the sort of. I think if you say offline payments, that's what a lot of people think about offline payments, that's what it is. So certainly, I think that the solution that we are offering to the market can certainly do that. And that's the product that IDFC First Bank has as well. It's just that we have started, as Sunil was talking about here, with the telecom solution now for the digital rupee.
Absolutely. So just to back Joachim up, this is the end state that everybody should look for, right? But that doesn't mean it should be the starting point as well.
Great. Next question. It's a safety one. How does the system provide protection against double spending in offline mode?
Yeah, great.
So,
yeah,
you can go for it.
You can
maybe
go.
add.
You go for.
Okay, so see, essentially, see what is that element that ensures that there is no double spend in an online world is nothing but efficient ledgering. The only difference here is the ledgering is not happening at the back end, while the ledgering is moved to the client side itself at the time of initiation. So this at both the parties, from the payer and as well as the payee, the ability to verify that correct ledgering is happening is good enough to avoid any double spend. And there are many ways to ensure that you can create digital certificates of every spend, so that it can be respent at the payer side. We have tried our hands as well in one of our projects called ORP, along with another national bank in India and Crunchfish, so that even interoperability could be displayed, right? So again, there are many design choices to go about ensuring there is no double spend.
Okay.
Okay, maybe you can add some.
Yeah, well, yeah, I think one of the aspects for I think for offline payments as well, we haven't really discussed that much here, but it is that offline payments, what are you transferring offline if you're talking about proximity? I think a lot of people in the CBDC world think that you're going to issue a token online and you're going to also in an offline mode transfer that token. That is certainly one way of doing it, but it is a difficult way of doing it because you have a fixed denomination of that token that is worth maybe $100 or say $10. And what if you're paying $8? You have a problem of the change there. And in offline mode, you can't really split that token. So I believe that for the change management and the fact that also for double spending, that you have to check whether online that has already been spent, it is better to look at a solution where you are in a trusted environment locally out of a balance that you have. You are creating a token locally, which hasn't been minted online. So offline payment is not really using online minted tokens. You are just reserving some that you are using in an offline mode. And this is another conversation to have, but I would encourage to look into our white papers. We're talking a lot about layer 2 solutions, which is using a balance-based payment rather than a token-based payment in an offline mode. I think in online world, you can certainly have tokens and you can have an account-based system, but offline, there is a lot of advantages of starting from a balance instead of starting from a centrally minted token. But it's
it could be a hybrid. It could be a hybrid system where
sure.
Online is token-based and offline is account-based, a value-based.
Yes, exactly.
Exchange.
Exactly. Yeah.
Okay. And another question is, do we need new regulation for offline payments? So far, cash has been the only offline payment instrument. Is this new type of offline payments needing regulation?
I think so. I think there is, and India, I think they are leading the way here. I think they've come up with regulations for offline payments set by the central bank, and I think it is that there are risk parameters for offline payments that the central banks should be thinking about and regulate, because offline payments is somewhat different. You don't have a central ledger where you can control everything. There is things which are offline, just like cash. But the difference, I think, with the digital cash is that you have the opportunity to reconcile with the online ledger occasionally. I don't believe in a solution where digital cash is completely cut off from the online world, just like cash is. Because when you issue cash, it just flows around sort of completely offline. But I think with digital cash, you have a lot of opportunity to reconcile with the online ledger, which should be utilized, I think. So what is called an intermittently offline solution, I think would make a lot of sense, not a solution where you never connect back. That would be, I think, dangerous to introduce. But also what is called a staged offline, where you only can allow to pay to one offline payment, and then you need to sort of bank that transaction, go up online. That is also limiting. So, but the middle ground here, the intermittently offline, where you can pay forward as well, I think it's what CBDCs will be looking at and seeing in the market.
Okay, next question. If Sunil, you don't have anything to add to that one. This is one of those questions that I love to hear when I'm talking to a client that wants FNA to simulate or model something about retail CBDC. How do you see offline digital payments impacting monetary policy transmission and the central bank's ability to influence the economy? Do you think that there is an effect of offline payments ability of digital instruments in monetary policy?
I would say sooner but later, yes. But it's too early to say in what way it will have an impact. There should be enough data point to have some sort of a trend to be drawn out here in terms of how it is affecting the way people are handling money and transacting as well, right? What are the trends? Whether there is a need to regulate it further, to contain it, or to scale it, right? So a lot of these things will depend on how the market shapes for any geography, for that matter.
Good. I think Joachim is not going to add, and I'm going to give you, I think the last one, which is, let me read something. Well, taking into account the possibility of natural disasters such as solar flares, earthquakes, so on and so forth, what happens if telecom and internet and mobile phones become unavailable? What is the solution if there is no cash type of physical digital payment instrument? What could be a backup plan for this extreme event kind of thing?
Cash.
And that comes from someone who is from Sweden, who doesn't use cash.
Well, and that's the problem.
I think Joachim did mention that he's not against using cash.
No. I know.
I think that.
No, I remember that I read that the Central Bank of Sweden said that cash is not going to disappear just because of redundancy and vulnerability of the payment system reasons, right? So it's there, but no one uses it. It's redundant, I guess, but in a good way.
A few people are using. There are still people using it, but my dad uses it all the time. And I think younger people as well who are not really using it digital. But there's a few people. But I think if it's hard to plan for complete disasters, because you mentioned also you don't have mobiles as well. But I think that if if you take out the network, offline payments is a resilience factor, and using then mobiles to be able to pay, or using cards for that matters to be able to pay as well. I think it is a resilience factor. I know the Swedish central bank I saw and they were experimenting with raising the floor limit for card payments for merchants. That right now you can be offline, but there's a risk for the acquiring side. But if the central bank could go in and take over responsibility, so you could accept offline payments in those sort of disaster scenarios, you can have still liquidity in the economy. That could be one way to increase liquidity offline, really.
Okay, we're right on the hour. So Joachim, Sunil, thank you very much. It was a really enjoyable, very illustrative and illuminating discussion. Thank you everyone for joining. This is the end of the CBDC broadcast number 22. If you want to get in touch with Joachim, Sunil, or myself, you will find in the chat, in the webinar chat, the links to our LinkedIn profiles, or also in the slides. And coming up next in a couple of days, November 22nd, in the FMI broadcast number 14, we're going to discuss molecular and atomic settlements with CLS and with FNA. So thank you very much once again for joining us today. Have a very nice day. Thank you, Joachim. Thank you, Sunil.
Thank you, everybody.
Thank you.
Thank you.
Thank you.